I have an order to sell the 7 high. It is big up, big down, so a possible trading range, but strong 3 bar breakout. Expecting at least a small test down for a second leg sideways to down. 15-minute chart, really strong breakout, 26, 27. Probably buyers around the 26 low, somewhere here, which makes sense. But I think we should at least get a test down here. So willing to scale in higher, but it is a trading range. So if the bulls get a strong breakout, then I'll look to exit early. So far, 8 is already a big enough surprise up that I think seller close bears on 7 will be disappointed and look to exit at the low close. So I have my order 2 ticks above the low close. I do think we'll get one more test down just because of how strong 5, 6, 7 are. But it is still in a trading range. So I just have to be careful with the management. I just sold more at the 6 high. If bulls get a strong close above the moving average, I'll exit at the market because even though it's a trading range, I don't want to see this start to accelerate up because it's a higher low major trend reversal attempt. Move my target to break even. I think we'll test down, so I move my profit target to break even, looking for a fill on a test down because this is a strong 2-bar breakout, so probably buyers somewhere in this area. And if we test down and fail and then close above the moving average, I'll just exit at the market. Because there were likely buyers at the 77 low from yesterday, I could have been more aware to be looking to sell higher only. But I was trading small, willing to scale in higher, so I thought it was okay. And I knew that this was a possibility that I'd have to manage out of it because of the context and the strength of this. So we'll see what we get. So we tested down and then started to accelerate above the moving average. So I reversed to long. So now I'm long 1 contract there. So there may be some sellers at the 5 high, but enough of a bear trap here that I think we'll get above 79 from yesterday. So I touched my target there. I think we're going to break above the 79 high. So I just got filled there at the 79 high. I lost 4 points on 2 contracts as it accelerated above the moving average. And then I made 8 points on 1 contract. So I made up for the loss. When I stopped in reverse, I only went long 1 contract. Eventually, I want that to be 2 because I was short 2 contracts. So then I would just stop in reverse and then go long 2 contracts. But because I'm still working on stopping and reversing, I want to just cut it in half so that I'm just sure I'm making good decisions and don't want to make a mistake on the stop and reverse and then lose on the first trade and then lose on the second trade as well. So because I'm still working on it, I'm only reversing with 1 contract. But eventually, that would be 2. And in this case, if I went long 2 here, then I would have made 8 points on 2 contracts and then more than made up for the loss and be green on the day right now. So something to work towards. But yeah, I should have been more aware of the fact that there were probably buyers here. So I could have only looked to sell the 6 high and I still would have lost, but I would have lost less. And yesterday and the day before I was trading, but I didn't take any trades. And then yesterday, I wasn't here, so I didn't take any trades yesterday. I don't think my trades are showing. Yeah, so no trades yesterday, no trades the day before. And then here I didn't know my executions weren't showing. So I shorted 7 high, 6 high, and then reversed to long here, and then exited at the 79 high. So I just bought again at the moving average. We had 2 internal legs down on 12, pause 13, and then down on 14. So 2 legs down, testing the moving average. I'm seeing this as leg 1, just a lot of strong buying pressure. So I'm seeing this as leg 1. This is a pullback, and then I'm expecting another leg up. It's a trading range, so can definitely get deep pullbacks. We'll see if bears get follow through. If bears get a follow through bar on 15 below the moving average, then I'll exit and look to buy more lower. So added more at the 7 low. That's my recovery ad that I mentioned that other day last week. And so the recovery ad is just to exit break even for someone who buys, for example, the 10 low and then buys more at the 7 low. I'll exit if we get breakout and follow through below the 7 low. We have 2 legs up for a bear flag and then a strong bear breakout, but bear flags typically don't look like this with this much buying pressure. So it's more likely just a trading range, in my opinion. But of course, if we get strong breakout and follow through below the bear flag and below the trading range, then I'll have to exit. So it just got filled there. A few ticks below the 9 low. So I ended up losing a little bit over a point. These kinds of situations, even though I've tested them, it's not an enjoyable experience, and it's really, really hard to do to manage real time. Um, yeah, I'm gonna have to find some, like, I'm obviously the other time that I did it, I took the full loss and then reversed to long, and this time it's doing what I expected, which is trading range and probably test up. But it's in real time, it's just it's too hard to manage. So only ended up losing a point, but the stress of the downside is, it just makes it hard to think clearly. I get into like this pattern of thinking where I'm just hoping it hits my target and not really thinking critically about the chart anymore. And I think that's probably not a good state to be in when trying to make rational decisions. So yeah, I'm gonna have to figure out a better way to approach the ones that are in trading ranges. And if I have in my mind that I'm going to be scaling in at the low of the micro channel, I may have to skip the first entry and just buy in the lower areas to minimize the risk and the downside. But yeah, I'll have to think through this. I'm gonna pause on the wide stop scale ins, and try to find something a little bit more practical for me.